Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers. This chart quietly wrecks the narrative. Since 2020, US CPI has compounded closer to 4% and not the Fed's beloved 2%. And that gap isn't academic, it's full 13% higher price level than where target inflation would have landed. Translation: the level shock is permanent, even if the rate cools. Central banks celebrate disinflation. Households live the cumulative damage. Markets meanwhile trade on forward inflation, not past sins. So the real trick wasn't hiding 4%, it was shifting the conversation from how much prices rose to how fast they are rising now. This is not just convenience, it's behavioral, rewiring at scale. When 45% of users open quick commerce for emergencies and 24% for daily top-ups, you have effectively turned retail into an on-demand utility, not a planned activity. The Kirana doesn't lose on price, it lost on time. That 51% drop in Kirana reliance, it screams frequency migration, not full substitution. High frequency, low ticket buys, milk, snacks, forgot the onions moments are moving online, while Kirana's risk being pushed into slower, bulk-driven relevance. The real alpha sits in that 30% snacks and beverages share. Impulse plus margin is equal to goldmine. Quick commerce isn't competing with supermarkets, it's quietly hijacking the consumer's idle thought cycle. India is still the number 4 global tech funding hub, but FY26 reads like classic quality over quantity reset. Total funding drops 18%, deal count shrinks, and $100 million plus rounds nearly halve. Translation: the tourists left, the adults stayed. What's interesting in this rotation is under the hood. Early stage funding jumps 33%. VCs are planting seeds again, while late stage takes a 38% hit, signaling tighter exit visibility and valuation discipline. Fewer mega rounds, more scrutiny, longer runways. Sectorally, enterprise tech leads with $3.6 billion, with fintech and retail tied, basically B2B plumbing plus monetizable demand winning over story stocks. And here's more IPOs and unicorns year on year, but from a smaller, more selective funnel. This reality check is catchy, but dangerously binary. It confuses consumer layer innovation with nation capability building. India didn't choose ice cream over semiconductors, it's playing a different stage of the game. China's stack EVs, chips, robotics was built on 20 plus years of state-directed capital, export muscle, and manufacturing depth. India meanwhile is monetizing its demand dividend first, payments, commerce, logistics, because that's where the capital turns faster. And yet the right panel quietly kills a meme. Companies like Agnikul, Cosmos, Rockets, Lightspeed Photonics, Deep Tech, and Frigate Industrial Infra show the base layer is forming, just not at meme scale yet. Here's the irony: CSR is meant to reduce inequality, but it mostly follows corporate pin codes. States like Maharashtra take the lion's share because that's where companies sit, not where deprivation does. So 95% of funds stay with the top states, while the most deprived states get just 12%. That's not redistribution, it's proximity spending dressed as philanthropy. Companies optimize for ease, visibility, and compliance, not impact. And the system quietly rewards that. Net result: CSR behaves less like charity and more like real estate. Location, location, location. Not long ago, India was the world's support desk. Now it's becoming the operating system. In a decade, services exports jumped 300%, pushing India to number 5 globally and flirting with Germany's scale. This isn't just IT anymore, it's consulting, finance, design, basically brains over brawn exports. While manufacturing takes years to scale, services ride on talent, bandwidth, and time zones, India's natural edge. And here's the kicker: global trade is slowing, but services are still compounding. So India did not just grow, it picked the faster lane.